You're listening to AI Prism from Seoul Economic Daily.
It's Friday, May 15th. I'd like to share some thoughts about finance daily. Imagine getting into a minor fender bender and your insurance claim somehow ends up funding months of traditional herbal medicine treatments.
Right. It sounds totally absurd, but that exact loophole is currently bleeding Korea's auto insurers dry.
Exactly. And so in today's deep dive into the Seoul Economic Daily's reporting, we're looking at how regulatory actions, or sometimes regulatory inactions, are forcing these massive structural shifts in Korea's financial system.
Yeah, and we really see this friction across three distinct areas today. We've got auto insurance, crypto taxes, and banking infrastructure. When markets collide with these regulatory timelines, the whole system just, it has to adapt.
Right. Let's start with what happens when the government acts a bit too slowly to protect corporations. Korea's top four non-life insurers just hit an 85.9% loss ratio in the first quarter of 2026. For those of you listening who aren't deep in the insurance weeds, what does that actually mean?
Well, the loss ratio is basically just the amount of claims paid out divided by the premiums they earn. For Korean auto insurers, their break-even point is around 80%.
Okay, so hitting 85.9% means they're losing quite a bit of money.
Deep underwriting losses, yeah. For 2025 alone, we are talking about a 708 billion won shortfall. That's roughly $505 million.
Wow. And the mechanical driver here, it's traditional Korean medicine clinics, right?
Yeah.
Patients claim these long-term soft tissue injuries and just use their auto insurance to pay for extended clinic visits.
That's it. Those clinics actually account for 60.4% of all auto claims now. It's wild. That hit 1.7 trillion won, or about $1.2 billion in 2025.
It's like having this leaky bucket, right?
Yeah.
And the government won't let you buy a bigger bucket by raising premiums, but they also won't let you patch the hole.
Yeah, and the patch was supposed to be the 8-week rule.
Right, the amendment that requires an actual medical review to prove you still need treatment after 2 months. But because the cabinet vote on that is delayed indefinitely, insurers just, they have to keep paying the bills. Have we seen this kind of structural risk globally?
Oh, definitely. It closely mirrors the UK's whiplash reforms back in 2021 or Japan's medical cost inflation in the 2000s. Both of those took multi-year legislative battles to fix.
Because when medical cost inflation outpaces restricted premium growth, the system just bleeds. So that's the government acting too slowly. But on the flip side, we have them acting with these rigid timelines against everyday investors, right, with crypto taxes.
Yes, the Ministry of Economy and Finance is holding very firm on hitting crypto investors with the new tax in January 2027.
And that's a 22% effective tax rate on annual gains over 2.5 million won, which is only about $1,800.
Exactly. And the pushback from retail investors is intense. A petition to abolish this tax hit nearly 10,000 signatures in just a single day.
Oh, wow. 10,000 in one day. And if it hits 50,000, doesn't that force a National Assembly review?
It does. And you have to look at the contrast here. In 2025, Korea completely abolished its equity capital gains tax.
Right. So stock gains are untaxed, but crypto gets hit with 22%. As an observer of policy, I have to push back on the mechanics of this. How does it make sense to deny a loss carry-forward deduction for crypto, an asset class globally famous for extreme volatility?
It is a glaring asymmetry, absolutely. From a functional standpoint, when you deny loss carry-forwards while taxing gains on highly volatile assets, you're suppressing trading activity.
So it clearly signals a government preference, right? Deliberately directing retail capital toward traditional equities instead of crypto.
That's the implication, yeah. And speaking of institutional moves facing these massive regulatory hurdles and individual cost pressures, institutions are finding ways to bypass the friction by just teaming up.
Right, the banks. 17 Korean banks are forming what they're calling the Banking AX Alliance. Can you break down what AX means for us?
Sure. So AX stands for AI transformation. It's essentially enterprise-wide AI adoption. And the organizer behind this alliance is the Korea Financial Telecommunications and Clearings Institute, or KFTC.
Which functions like a banking clearinghouse, right? Kind of like Fedwire in the US or JPS in the UK.
Exactly. And the whole purpose here is efficiency and cutting costs.
Well, yeah, to me, 17 banks building separate, highly regulated AI models, it's like 17 restaurants sharing one building, but insisting on installing 17 completely separate plumbing systems. It's just wildly inefficient.
That's a great analogy. By sharing that AI payment infrastructure and synthesizing data through the KFTC, They cut all those duplicated costs. And crucially, they align on regulatory interpretations.
Oh, which heavily reduces the risk of individual noncompliance. I mean, when you look at this alliance, it really feels like the East is standardizing while the West is still fracturing into these individual AI silos.
It does. And I think that's a critical question for you to ponder today. Will centralized, clearinghouse-led alliances like Korea's ultimately outpace the fragmented bank-by-bank AI adoption we are currently seeing in the West?
That's today's AI Prism, Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a 1A free award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.